Hey, it's Jonathan Gurney. It's Friday. It is 3:24 p.m., so not quite at the close, just watching technicals, which at this point, that is what the market is. We have to be real about that. The last few days have been great scalping opportunities. As previously communicated with my clients, again, all this is not a recommendation. None of this is a recommendation. It is simply giving you my thoughts, my opinions, and where basically trying to put the puzzle together here. So here is the picture of the S&P 500. Obviously, the market has been all over the place this week, and it is still well below where we opened Monday. So it's been a nice recovery. Like, again, here's the S&P 500. Huge down move. That's a big move. Again, it tested the 50-day moving average. It actually went to 40.20 overnight. So a lot of times, this is kind of the line that's in the sand that basically says if we don't get above that quick, we have problems. And based on previous, again, none of this really matters, but it's important to understand the psychology behind this. And what a lot of patterns like this look like. So again, we tested, held, nice move. Nothing's changed in the economy. It is actually improving. And when things improve, you got to start questioning, how much further can we go here? The way I would like to go about this and explain it is look at companies like Google, Amazon, Facebook, unbelievable reports. And they sold off on earnings. In short, I believe still to this day, despite what we're seeing in price action, the market, in my opinion, is now trading off 100% technicals, which not that ever really changes. We're seeing pockets of strength. Value still continues to be the strongest. So financials, materials, healthcare has done well. REIT's not too bad. But in short, we finally saw a nice bout of volatility. It was about 5%, and we regained about 3.5%. And it's testing this gap right here, if you can see that. And that's what I'm looking at all day. And I'll show you another chart. Like this gap, it's 100% technical. A gap means a big dip overnight. And a lot of these get tested before any real decision up or down. So while in hindsight, I would be like, usually I do buy this, even if it's for a 2-day move, but I'm just not, I don't have enough conviction to really feel comfortable adding here strong and feel confident about it. Nothing's really changed in terms of my viewpoint. I think under the table growth momentum is really struggling. Now, could we rotate into those? If we don't, I think we have a problem, because I do believe that value is now at a point where it's like, man, that's pretty pricey as well. So I'm under the camp that I think we just need a little breather. It might be 8, might be 10%. I don't think we're there yet. And based on previous price action, I think it's similar to other periods. Like, look, 50-day touch. We fill this gap and we go down. I don't know if this is a great short opportunity or not. I'm afraid if I do that, everybody's thinking the same thing and it actually pushes it higher. But I can tell you, I am still not loving the risk reward. I know price action is good. I'm very aware of that. I just do not feel like a lot of the things that I'm seeing are looking great under the hood. And congratulations to those that have done well during buying this. I've been out for 2 weeks just saying I feel like I'm hitting a wall here in terms of, now personally I've been trading and scalping my own account, but that risk is not for most of my clients. So it's not been easy, not been an easy market. Congratulations to those who've done well. But in short, this gap, I think it might go a little bit higher, but the risk reward here has not been good. That's just my opinion. Again, here's a different perspective. The 5-day, it's this gap that it's about ready to touch. And it doesn't surprise me whatsoever that it's doing this. You're like, why didn't you add then? That's a good question. But I just don't know if any of this has any real staying power. And that's my concern. Now, again, none of this has anything to do with the economy. I think the economy is fine and will continue to improve. The problem is the expectations are going to increase as well with that. And after the earnings reports that we have seen, which for the most part have been unbelievable, are we going to be able to meet those expectations? I think it might be a tough 2 months, to be honest with you. So I got to be real about that. My job is to be a realist about what I'm seeing. Yes, I am a little upset that I missed the opportunity the past 2 days, because usually I buy the 50-day without even thinking and give it a day or two to see how things work out. And it's day 2. We're holding currently. We'll see what happens. But another thing that's interesting, we'll see if it holds. I'm going to change the perspective here. The time frame, the VIX, there was a gap right here and we filled. So we're now below 20, which is a good thing. We've got to be real about that. So I'm constructive on the market. And again, all this is short term. Okay. So if you're asking me, Jonathan, do you think we'll be fine by October? Yes. I think that this is a 2-month thing where everybody's going to lose their mind over the next couple months because it's going to be up 3, down 5, up 2, down. That's just my opinion. I think it's going to be very difficult. Seasonality is usually plays into that. I think we do have a problem with inflation, but that doesn't mean certain areas cannot do well in this market. So the summary there is I'm very, very cautious short term, but long term, even into the end of the year, I think we're higher than we've seen thus far. In short, I think it's kind of the peak of the first half. Okay. So I do think we've seen that. And if I could be 100% wrong, but based on what I'm seeing in price action, things under the hood, I think you got to be really careful. Now, a lot of the sentiment areas, this down move was a really nice reset. And that's what I've been waiting for a while. But I'm concerned it's going to be the slow grind down where we go down, up, which right now this looks very similar to that. Where you test this gap, you go down. Now, buyers may continue to come in because the Fed keeps pumping. I'm not sure why, but they are. And as long as they are, they might do better than expected. So, got to be open mind. But for me and my process, I just have to be realistic about what I'm seeing. Price action is fine, but I'm just not loving where I would have to enter to get these stocks. Momentum growth has gotten hammered. Like if you look at some of these names in the past that we've been in, I bought a lot of these on 15% dip and got out because they weren't holding. I mean, this is a huge dip. I mean, from 159 to basically 97. Guys, that's a huge retracement. I bought in right around here and it went lower. I'm like, I got to get out of these. These are just not in trend. And below the 200-day moving average is, in my opinion, has lost institutional interest completely. Now, it can obviously get bounces like today. It's a great day. Yields are lower, which is good for this area. It's just an oversold bounce. You can see it gets here. Somebody's going to probably buy it. But there are pockets of opportunity. And like if we're looking at tech growth, more realistic names, in my opinion, it is testing the 50-day as we speak. Okay, so I want to show you different perspectives. Like under the hood, growth is struggling. The Dow looks much stronger, which is more the inflationary trade. You can see it's almost back to all-time highs. Okay, nice little cup, very quick. But I just not love the risk reward. It's almost thinking overbought already. But in short, I'm being very, very cautious. I know I missed out on a 3.5% increase where I usually do buy. But I gotta stick to my guns here. This could go a little bit higher short term, but I'm just not. When I was trading in and out of stuff, I felt like I was hitting a wall. It didn't matter what I was in. I think if you're in right now, you better be pretty diversified and scalp. It's been a great scalping opportunity, but I'm not sure these gains really hold. And so I'm not trying to be bearish. I'm not bearish. I'm bullish. I think things will be fine by the end of the year, but I'm going with the averages, meaning I think we're going to see an average of 8 to 10% decline every year on average. And I think we need to see that to flush, to take out some of the complacency. That's my take. And I, again, could be very wrong. I've been wrong before, and I just have to kind of stick to my guns here. So I hope you're seeing what I'm seeing. I hope you understand a lot of the metrics that I'm seeing. Like this is a nice move in the VIX. A lot of fear. This is what you want to see. Consider buying. I opted not to because it was only a 4 to 5% decline. Now, it's not unusual to get a 3% increase quick and then come back down, but we'll see what happens. I'm watching closely. I'm watching every second. It's been maddening, and I'm sure if I had been in, it would have drove some of my clients nuts. So I appreciate your trust. I'm still just waiting for better pricing, trying to be patient. I know that is aggravating when you see a day like today and the Dow is up 2 point. Oh, excuse me. This is Dow Holdings. That's my fault. I'm glad I caught that. Indu. So it's not sold or overbought. I'm sorry. Let's clear that up a little bit. It's not overbought, but it is the strongest of the indexes. That is definitely true. So my apologies there. This is Indu, which is the Dow Jones Industrial Average. So my apologies. But this, to me, if you're putting your money anywhere as of right now, this seems to have the most strength. I'm opting not to, but if I were forced to, this is where it would be probably at this point. Growth still looks vulnerable here. If I go back to the QQQ, still looks vulnerable to me. Very well could pounce higher, but a lot of times when this tests the 50-day, look, it's just a messy, long period, and I expect nothing less from the market, even potentially for 2 months. That'll be frustrating, and that's why I'm trying to regain some confidence for clients, myself. Just being realistic. It's been a wild road. I have not done well this year, and I think I just need to wait for better pricing and be realistic. So appreciate your trust. Thanks for hanging in there. It's not been a great year for me. Let me know if you have questions. Thanks, guys.